Bitcoin mining versus buying Bitcoin. In the 10 years of running my companies, I've seen people lose money chasing hype, pumping coins, and trying to trade every move. I have also seen people make life-changing money by investing at the right times, but these people have had the right guidance. Very few people understand how to compare mining to buying Bitcoin, and even fewer run the numbers. And that's exactly what we're gonna do today. Should I mine Bitcoin or should I be buying it directly? Here are the shocking 5-year results that no one is talking about. Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it. The most common question I get asked is, am I better off buying Bitcoin directly or buying Bitcoin miners and letting them passively accumulate Bitcoin for me? By the end of this episode, you'll know exactly how much profit one miner could have generated in the past 5 years, how it stacks up against simply buying Bitcoin with the same amount of capital, and more importantly, how you can take advantage of this strategy moving forward, even in today's market. Now, I'm not here to hype mining or buying Bitcoin because I actually do both. I'm here to give you the facts because the results, they speak for themselves. Most people look at Bitcoin mining through one lens: buy and hope it goes up. Often the issue with this is people get excited to buy Bitcoin when it's at the all-time high prices and they don't think about dollar cost averaging. They just buy one lump sum amount and they hope for the best. But what they don't realize is that Bitcoin mining actually offers something very powerful: consistent accumulation. Instead of guessing when to buy or getting all emotional during the crashes, mining lets you stack the sats daily, regardless of the price, and it's completely passive and automated. Let me explain to you the two strategies that we're looking at today. The blue line on the chart that we're going to look at is showing the mining strategy. This is where you're buying one miner outright and running it continuously. With this approach, you pay a one-off payment for a Bitcoin miner, and then at the end of every month, you pay a power bill to keep that miner going. In return, you have Bitcoin landing into your wallet and accumulating every single day. The second strategy, represented by the red line on the chart, is the alternative. It's spending the equivalent cost of one Bitcoin mining machine and instead putting that into buying Bitcoin in one lump sum purchase. Then, rather than paying a power bill at the end of every month, you would dollar cost average the equivalent amount of the power bill directly into buying Bitcoin. Now, the reason in this model we run it for 5 years is because Bitcoin miners are profitable to run for about 5 years on average. 5 years ago, we purchased the miner that is used in this comparison, and recently we just decommissioned it. So let's get straight into the numbers and see what it looks like. All right, so let's look at this on the charts. Basically, what you can see here, that blue line is representing the strategy of Bitcoin mining, and the red line is representing the strategy when we're lump sum purchasing Bitcoin and then dollar cost averaging the power bill amounts every single month. Now, as you can see, the blue line starts in the negative because we have to buy this Bitcoin miner. This is all in US dollars, by the way. So when we purchase the Bitcoin miner, we're starting at around the $2,700 US dollar in the negative, and we're going to be putting the same amount straight into around the 2,700. This says 2,800 straight into buying Bitcoin. So that's the comparison. Now, as time goes on, the blue line is showing your profit going up. And the reason that your profit is going up is because every single day, your Bitcoin miner is accumulating that Bitcoin for you. Now, the reason the red line is going up is because Bitcoin's price is going up. And then every 30 days, you're purchasing some more Bitcoin rather than putting it into a power bill. So let's look at over the course of the 5 years, how this pans out. They kind of run alongside each other. But then at the very, very end, what we see is the Bitcoin mining actually outperforms. you end up with $96,000 worth of Bitcoin compared to the dollar cost average and lump sum purchase, which is only $81,000. On top of that, there's other benefits with the mining. The end result you can see here, you actually get a tax benefit, a major tax benefit. There's 30% of all of the expenses, if you're running this in a company, come back, and that is a $4,490 return for you. So all in all, you have $96,000 of Bitcoin you have accumulated passive free. You don't have to worry about the market. And on the end of it, you've also saved yourself $4,498 in tax. The end result of the Bitcoin lump sum and Bitcoin dollar cost average purchasing is only $81,000, but you had to execute on all of those dollar cost averages. You had to go and buy that initial Bitcoin, so it wasn't passive. Now, this example that we're looking at right here, it's actually done at the lowest point of price in 2020. So it's beneficial to the lump sum purchase model that we're looking at. Now what I want to do is look at a model where you didn't actually do the lump sum purchase at the bottom of the market. You actually lump sum purchase at the top of the market. And in this example, we're going to see mining really outperform. Hey guys, real quick, if you've been wanting to earn passive Bitcoin without dealing with the headaches of watching the markets, you've got to check out Mining Store. We help investors buy and host Bitcoin miners in our professional grade facilities. No tech skills, no infrastructure costs, just passive Bitcoin straight to your wallet. If you're serious about building long-term crypto wealth, then hit the link below and book in a call with one of our experts. Now let's head back to the episode. So again, exact same model that we're looking at. The Bitcoin miner purchase happens at the start and you start in the negative, and the Bitcoin direct purchase happens at the start and you start at around $4,000. But what happens is at the very end, because your initial purchase was at the top of the market, obviously you didn't know that at the time or you wouldn't have done it. But because that's what happened in this model, the end result is substantially worse off for the Bitcoin direct purchase or lump sum purchase. What you end up with is only $42,000 compared to the Bitcoin miner, which is at $67,000 and has those taxable benefits. Now, this is a great comparison to show you two passive approaches to investing into cryptocurrency. Bitcoin mining, one of the best things about it is it's so passive and you get that dollar cost average strategy. And it's comparing it to a trader or an investor who's following probably the most basic version of a passive strategy, just buying some Bitcoin and then dollar cost averaging at the end of every month. Now, I want to make it abundantly clear that is not how we teach our clients to invest into Bitcoin. And so what I want you to understand is if you put a bit of education into understanding Bitcoin cycles, if you put a bit of knowledge into understanding how markets work, and you get the right guidance, you could absolutely outperform the results we've seen on the red line on the chart. However, think about someone who's coming into the cryptocurrency market and they've never even invested in Bitcoin before. Maybe they don't even understand Bitcoin yet. They're not going to have that knowledge to make informed decisions and pick the bottoms of the market, sell out at the tops. They're probably going to follow something similar to what the red line portrays, and that's a very, very basic strategy. Now, a really key thing that I want to cover here is traders' psychology. When you start getting into cryptocurrency, it's so easy to look at models like this and go, oh yeah, I'll follow that strategy. But unfortunately, when things don't go to plan, they really test your trading psychology and your investing psychology, and you just simply won't be able to do it as simple as that. So to highlight, that's why the Bitcoin mining is such a beneficial strategy. And I want to share a story with you of when I really realized this myself. The market was crashing. Bitcoin went from, I believe it was about 64,000 in the previous all-time high, and it was crashing down, 40, 30, 20. It got as low as around $15,000 to $17,000. And I remember exactly where I was when Bitcoin was hitting $17,000. We were in Miami, we were over there for work, and I said to my business partner, Cal, we've got $100,000 sitting in this wallet. Let's buy Bitcoin, let's do it. And he said, oh, I don't know, the markets are still pretty shady. The trader psychology got in the way. We didn't end up buying it, but I tell you what did buy it. the Bitcoin miners. We had Bitcoin miners in the background constantly picking up Bitcoin at those prices. And that's a perfect example for you of machines don't have emotions. They will just execute on the strategy that is set for them. And if this resonates with you, it's really why I strongly preach having a dual approach. Have the Bitcoin miners in the background constantly accumulating Bitcoin. And then, of course, if you want to go and buy Bitcoin at certain low prices, absolutely do that. And you'll only get better at doing that in time. You'll time the market better the longer that you're in the market. But let the machines do what they're good at and following a set strategy of buying every single day. So what I want you to take from this episode is the 5 years of real data showing what mining can achieve and what a basic dollar cost average strategy can achieve. But what I want to make very, very clear to you is you can do both. If you're sitting there going, I want to know more about mining, then go to the description of this video and book in a call with one of our experts. As for the trading side, if you're ready to jump in and start getting more out of the crypto market, following real guidance and strategy, then book in a call on the Imperial Wealth side. And one of our experts on that side will help you with everything you need. I can't wait to hear from you guys. Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.